Welcome to the latest Motley Fool scoreboard. I'm Anand Chokkavelu, and we've got longtime fools Travis Hoium and Lou Whiteman giving a 1 to 10 rating to the company I know Travis used to use back in his engineering days. It's Autodesk, ticker symbol ADSK. Talk about the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Travis is at a 6. Lou is at an 8.
Yeah, so, not just Travis. What Excel is for CFOs, Autodesk is for engineers. It's complex software that automates industrial design, helps troubleshoot before prototypes are made. The software is sticky. They've moved to a subscription model, which has kind of caused them some turbulence, but now that's basically behind them, and I think it was a good move. Yes, there is some potential here from threats from AI and other tools, but professional users are unlikely to abandon Autodesk tools anytime soon. That's my bet anyway. Really strong business. I landed an 8.
I think generally what Lou said is probably right. Any sort of disruption that's coming for Autodesk is probably going to take a lot longer than something like image generation. So the impact that we've seen on a company like Adobe. But I think the general trends are probably going to be similar, where software tools that are less expensive, you can just look at their price sheet. $1,000 is basically where you can start with Autodesk products. That's an annual subscription. Their subscribers are only up 7% last year, so you're starting to see slowing of the growth. Is there something on the horizon? We don't know. We don't see that quite yet. This is still an industry standard, but I fear that it's kind of ripe for disruption, just given the kind of stodgy business and stodgy products. They kind of look the same as they did almost 30 years ago when I started using them.
Let's move on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you are at 6s, Lou.
Yeah, so speaking of CFOs, I just mentioned CFOs a second ago, but Autodesk last year, they had to replace theirs after an internal accounting investigation that ended up delaying financial results. That's not great. Now, as the CEO, Andrew Aganos, he had been in a job since 2017, did not get caught up in that, remains on the job. But, that has to nick the score on management for me, at least. There's also been a lot of questions asked by investors about accountability coming out of that, which, I think those are fair questions. Overall, though, I think management has done fine. The subscription shift I mentioned caused a lot of turbulence, yes, but I think it was the right move, and kudos to them for having the courage to go through it. They have been pretty good strategic acquirers, too, which you like to see. So, certainly not perfect, but a solid 6.
Yeah, I agree with Lou. It's had the same score. The strategic acquirers part, I think, is something you look back and they've really expanded the business in a lot of different ways by just kind of bolting on new pieces of software. I don't know how much longer you can do that. That's kind of the big question, is what sort of organic growth are you going to get out of the business? But not amazing scores here for management, but kind of steady as it goes.
Financials, a 10 is a fortress, a 1 is yikes. Both 8s here, Lou.
So the balance sheet is fine. They have a bit more debt than cash, but nothing to worry about there. They generate a lot of operating cash flow, which we love to see that. Last year, a gross profit of $5.6 billion on $6.1 billion in revenue. That's just great. That's fantastic. All right. I also like that year over year, last quarter, the administrative costs actually went down, and that money is flowing into kind of R&D, marketing, things I'd rather than spending money on. Just a real nothing to worry about financial story here.
Yeah, the one question is the net income and free cash flow have kind of stagnated for the last 5 years or so. So that's where I'm looking for a little bit more growth, a little bit more margin expansion for a company like this. So very, very solid. I love the subscription business. I don't think there's a lot to complain about, but that's something I'd be keeping my eye on.
Travis, let's talk valuation. How well will Autodesk stock do over the next 5 years? How safe is it? 10 is a sure thing. 1 is a lottery ticket.
Yeah, I went relatively low on the expectations here, and that's just because this is a fairly expensive company. 5 to 10% is what I said for expectations, and a safety score of about 6. I think there's the possibility that we have a slowing growth company. I mentioned that the subscriber numbers are not growing as much as they were in the past. I also question how much you can raise those subscription prices. They're already pretty high, thousands of dollars if you're, in kind of the construction industry. So there's some potential headwinds, potential for disruption. And the stock right now, as we're recording, trading for 26 times free cash flow. So that's a pretty high price to pay. I just don't want to set those expectations too high.
Yeah, so I'm a little higher, 10 to 15% with an 8 as a safety score. And you're right, the stock is not cheap, 50 times earnings or whatever. But the stock has never seems cheap. And it's near the low point in the last 5 years. So that's something at least. I don't think disruption is going to happen anytime soon. I think this is a market beater from here, but not an NVIDIA. 10 to 15% safety is an 8 because you may quibble in the valuation some, but I can't see the sky falling. I can't see people stop using the products.
Travis, let's move on to everyone's favorite topic. Is there a company in Autodesk space that you like more?
Maybe in Autodesk's region, I don't know if it's their space, but the stuff that recently came out of Google, so Alphabet would be the stock here, related to robotics, artificial intelligence, my mind went to, when are we going to get to the point where you can design a building by just saying exactly what you want built, or a new product? I mean, that was what I did, was design products. And so you're doing 3D modeling. When is that going to come to artificial intelligence? That's the kind of disruption. We don't know exactly where that's going to come from. But a company like Google, to me, is building the kind of platform that could potentially disrupt Autodesk's entire business. And so that's maybe a little bit out of left field, but that's where my head went.
So to keep the analogy going, as someone who has tried to shift over to Google Sheets for the last, I don't know how many years, and just found it's a poor substitute for Excel, I'm not worried about it. My answer is no, there isn't anyone better. This is the industry standard, and it's going to remain that way.
Thank you to both Lou and to Travis. They've given Autodesk a decent overall score of 6.9 out of 10, down a bit from the previous 7.1 a year ago, but basically right in line. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Upstart Holdings. Till then, Fool on.